Sejam todos bem-vindos aí ao Forex! É isso aí, turma! Estamos aí, mais um dia aí, sejam bem-vindos, dia 13 de novembro. Vamos começar aí, Forex do além. É isso aí, galera. Já vai começar aí a brincadeirinha que eu mais gosto. Agora a gente vai no Forex. Durante o dia a gente ganha din-din no real e à noite a gente ganha din-din no dólar. What? Menino, você não dorme não, menino? É direto. É direto. Deixa para descansar depois. Agora é porrete direto. Vamos lá, pessoal. Venda do Dow. Assim que abrir, pode vender. E assim que abrir o ouro, pode comprar, tá? O Dow vai ter que dar uma corrigida aí, cara. Tá nas máximas. Pode vender o Dow. Vender o Dow e comprar o ouro na abertura aí. Pra ser feliz. Bora que o pessoal hoje vai fazer correção, tá? Ó. Vai. O Dow aí nem abriu. Certo? Estranho. Abriu. Céu. Galera, é fundamento craniano aí, tá? Um Dow. E o alvo do... Já eu passo o alvo aí do ouro e do Dow, tá? Ó, o alvo do ouro. 7,2, tá? Aqui, ó. 7,2. 14,72. Tá bom? E o stop do ouro aí, ó. É 14,61. Agora vamos lá pro Dow. Dow. Stop do Dow é no 27.860. E o gain do Dow é 27.715. Bom, 27.715. Beleza?
dig up dirt for political ends, and both said yes. They both denied being opponents of the president. Hong Kong is set for continued disruption Thursday morning after another night of protest clashes with police. The government has ordered all public schools to shut for the day, the first time it's done so since the unrest began. On Wednesday evening, riot police moved in to clear the streets across the city. Local media have also reported that top officials were gathered at Chief Executive Carrie Lam's residence. The International Energy Agency says its forecast for a peak oil price is still open to change based on future government policies. The IEA says it expects global oil demand to plateau around 2030, but Executive Director Fatih Birol told Bloomberg that much will depend on how the world's leading governments choose to manage their individual countries' energy needs.
If the governments take much stronger, clean, efficient technologies, push them much stronger, we may well see that the peak can happen earlier, but at the same time, if the policies of the governments do go in the other direction, we may see peak comes later.
And airlines and other operators of that Boeing 737 MAX are being warned to check any parts from a Florida repair station implicated in last year's Lion Air crash off Indonesia. The FAA alert says Extra Aerospace failed to keep proper documentation and didn't follow its own rules on evaluating parts it rehabbed. Extra worked on a sensor that failed on the Lion Air jet that crashed, killing 189 people. Extra cooperated with the FAA investigation but said it disagreed with its findings. And Tesla's new plant in Shanghai has won permission to start mass production. It clears one of the last remaining hurdles to begin selling locally made cars in China. The mainland's first plant, wholly owned by a foreign car maker, is a crucial test of Elon Musk's bid to prove Tesla can sustain profitability. The company showed off the first Model 3S to be assembled in Shanghai earlier this month. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is Bloomberg.
Jess, thank you. We're getting some M&A news just crossing the Bloomberg. There were reports that SoftBank's internet business, this is the former Yahoo Japan, of course, now known as Z Holdings, is holding final talks to merge with the messaging service Line. That's according to the Nikkei newspaper. Now, SoftBank holds a 44% stake in Z Holdings. Line is, of course, controlled by South Korea's Naver Corporation. The parent companies have been involved in these discussions, according to the Nikkei, and they're talking about a potential tie-up or a merger. And SoftBank in that deal could acquire shares from Naver as part of that. We know that Line struggled after its IPO back in 2016, but those shares are up about 20%, 21% this year, trading in Tokyo. Z Holding shares also outperforming, up about 40% so far this year, Sherry.
Right, Heidi, let's turn to trade because President Trump has hit an optimistic tone on the talks with China, saying negotiations are, quote, moving along rapidly. That contradicts earlier reports that the talks had hit a snag over purchases of agricultural products, as crossed over senior trade editor Sarah McGregor. Sarah, so we thought the farm purchases were the easy part of this deal. What's going on?
Yes, it seems, you know, if you're confused by the farm purchases, I think it's a club that we've all joined at this point. It seems like, you know, it really is a political football, I guess, for China to use these purchases, of course, because farmers are a big support base from Trump. They've been some of the biggest victims of this trade war in terms of having their export market sort of cut off from them. So, you know, I think it's no surprise that if there is some disagreement about the farming purchases, it might be China trying to figure out how best to take advantage of this, how to use this to make sure that it gets, for instance, the tariff rollback that it wants. But all that being said, you know, we did hear from Trump today. He said that the China talks are progressing well and rapidly. But, you know, I think we'll all really get that determination when we finally have an agreement and the two sides sit down and sign it. Until then, there's still a lot of uncertainty about whether this thing can actually be wrapped up.
Sarah, and of course with Chile now no longer, that was a natural venue for them to meet. Are we hearing any more details as to when or how this deal could be signed, or any sort of timeline going into now the end of the year?
So according to Donald Trump, it will be signed in the U.S. Of course, there are two parties in this, and China will also want to have a say in where this deal is signed. Even with the time difference, you would imagine that it would be important for both sides to agree on sort of neutral territory, perhaps a time zone that will hit either of their, media and public at a good time, not when someone's sleeping. So I think that, this is still an important aspect to be ironed out. And as of late, we're still under the assumption that this deal will be signed in the next few weeks, probably by the end of the year. But the longer it takes, it seems like we lose some momentum, and it throws a big question mark over whether it can be signed quickly this year or at all.
All right, our senior trade editor, Sarah McGregor, there with the latest on these ongoing trade talks. Well, still ahead, Japan releases its latest GDP figures later this hour. Growth is likely to have slowed. We'll have reaction from Bank of America's Izumi Zavalio.
But up next, the Fed chairman echoes comments he made last month, calling the current stance of monetary policy appropriate. We'll discuss the options if global growth slows. This is Bloomberg.
Seen in 50 years. Monetary policy is in a good place, but we're going to be watching very carefully incoming data, and if developments emerge that cause a material reassessment of the outlook, then we'll act appropriately. Our economy is in a strong position. We have growth. We have a strong consumer sector. We have inflation that's a bit below target. So the very, very low and even negative rates that we see around the world would not be appropriate for our economy. The key to keeping this going and to it continuing are that we keep job creation at a solid level, that households retain their confidence, that wages keep moving up. That seems to be the engine that's driving the U.S. economy forward at this time.
Fed Chair Jay Powell signaling further rate cuts are unlikely for now. Let's discuss this with KPMG Chief Economist Constance Hunter. Constance, great to have you with us. He barely moved markets today, which for him would be a good day, right?
That was a good day for him.
Did you hear anything new today?
So, no, I think it was interesting to hear the Fed really articulate and Powell articulate that it's sort of mission accomplished, right? And we saw that with the last jobs report and the revision higher, that the impact of the 3 rate cuts have started to feed through the economy. And the reason they fed through so quickly is that it was such a significant shift from 3 rate hikes this year to a pause to 3 rate cuts. And we've seen a change in mortgage rates. Rates are lower, so it's sped through the economy, but I think there were three important things that he added and sort of underscored, which is one, the terminal rate may be lower, and so there's some research out from the board which suggests it could be as low as 1%, and I think the Fed is open to exploring that, especially if, and this is the second thing, look, inflation remains below their target. And this is a global phenomenon. If we look globally at global central banks, most global central banks have not met their target more than 50% of the time. So they're all less than 50% of the time. The two major exceptions are Australia and the Bank of England, and that's because they've had currencies that have been able to weaken to help them get up inflation. It hasn't been because they've had strong demand. Right, so, and then I would say the third thing is how data dependent they are and how much further they think that the unemployment rate can stay at these levels.
On those points, inflation expectations have been rising slightly. This GTV chart on the Bloomberg showing the 5-year break-even rising, but still below the inflation print. And we had core inflation numbers this morning disappointing as well.
Well, I mean, again, 1.7, they're in the range, right? Look, or is that's probably core CPI, but in any case, you have, I mean, inflation is within a few percentage points of the target. I think what's interesting is that they're holding on to this idea of it being symmetrical, which would imply that they're willing to allow several quarters of it being above 2%, and it just seems we're so far from that. So I wonder when they're going to stop or drop the symmetrical language. The fact that they keep it makes me think that they anticipate that we might actually get a bump up in inflation at some point, and I think that's an interesting feature of the situation.
Constance, does an alleviation of trade tensions or meaningful agreement change the Fed's trajectory or their narrative?
You know, that's an excellent question. If you look at sort of the indicators of why the economy was slowing, certainly an inverted yield curve was one of the key reasons. And you think of the yield curve sort of as taking the temperature of the economy. It tells you the economy is sick if the yield curve's inverted. It doesn't tell you why it's sick. So if we dig deeper, we look at things like 6 quarters of negative housing investment, for example. That turned around in the third quarter. I don't think that's trade related. So certainly if we get some agreement in trade, that's going to be positive for the economy. It could help turn around capital expenditure, but I don't think we're going to go to a place where we go back to 3% tariffs, right? So we still have higher tariffs, which are going to be punitive to trade between the U.S. and China.
What does a Fed that stays on hold during an election year look like fiscally on that side?
Well, I think in terms of how much, how much money is spent refinancing the debt, right? That depends on the market interpretation of rates and whether the yield curve stays as steep as it has been. And while everybody's talking about that, I think that the odds that the Fed actually stays unchanged over the next year are actually somewhat slim. I would say it's a pretty binary outcome. I think that it's possible that we get that higher inflation, that it's the symmetry that the Fed is looking for, but I would be surprised if they stand pat in the face of that. Furthermore, if we get a softening of the economy, we still have a global slowdown going on. We're going to get German GDP tomorrow. We're going to see if they've had a second consecutive quarter of negative growth. I think there's a lot in the mix here, and I think it's way too early to be making the call that they're going to hold pat for the election year.
Constance Hunter, thank you so much for your time today. KPMG chief economist there, and Jay Powell isn't the only Fed official to reinforce a rate cut pause message. Today highlights from our exclusive with San Francisco President Mary Daly ahead. Now, President Trump cared more about his investigating Joe Biden than the fate of Ukraine. That's according to testimony from a key witness in the first public hearing in the impeachment inquiry. Our Congress editor Joe Sobchak has the story. Joe, so the key witness was acting Ukraine Ambassador William Taylor. Let's take a listen first.
Following the call with President Trump, the member of my staff asked Ambassador Sondland what President Trump thought about Ukraine. Ambassador Sondland responded that President Trump cares more about the investigations of Biden, which Giuliani was pressing for.
So, Joe, what were the key takeaways today?
Well, that was certainly one of them. It was a pivotal piece of testimony, for both sides, really. The ambassador's testimony puts Trump much more directly involved in the pressure campaign that Democrats say the administration administration was exercising on Ukraine, trying to get them to investigate Joe Biden and Biden's son's dealings with the Ukrainian gas company, as well as a so far unsubstantiated conspiracy theory that the Ukrainians were somehow involved in 2016 election interference. But this was a key piece of testimony, but the Republicans did pounce on it by virtue of the fact that it was a second-hand account. This was the ambassador relaying what an aide told him he was told by Gordon Sondland, who is the U.S. ambassador to the EU, and has been a central player in various accounts of the Ukrainian affair regarding the administration and their attempts to get Ukraine's investigations underway. So there was something there certainly for the Democrats, but the Republicans also did have a counter that sort of pointed out the fact that the White House is not allowing any testimony from people with direct knowledge of a lot of these events.
And Joe, Deputy Assistant Secretary of State George Kent also answered questions.
After you expressed the concern of a perceived conflict of interest at the least, the Vice President's engagement in Ukraine didn't decrease, did it?
Correct, because the Vice President was promoting U.S. policy objectives in Ukraine.
And Hunter Biden's role on the board of Burisma didn't cease, did it?
To the best of my knowledge, it didn't, and my concern was that there was the possibility of a perception of a conflict of interest.
Joe, can you give us some more context to this, and did we hear the President respond?
Yes, well, this is a point that the Republicans turn to again and again, is Hunter Biden's role on the board of the Burisma was a key point that Trump was said to be concerned about. However, he did puncture a few of the arguments by saying that there was, in fact, no evidence that there was corruption going on at that time, and that Biden, despite the appearance of a conflict of interest, the Vice President had done nothing to interfere with any investigations, and in fact was pursuing a policy that was supported by both the U.S. And the rest of its allies in Europe. Trump today responded to this, saying that he had not been watching it, but he did also join in the Republican arguments that this was all second and third-hand information being passed along. He said he did not recall any such conversation with Ambassador Sondland that the envoy had detailed, in which he allegedly said that he was interested in pressing for the investigations of the Bidens. So we've gotten a few more insights. We've gotten at least a little bit more of a picture drawn in public for the first time. But the investigation remains underway and will continue next week with more open hearings.
Joe Sopcich, a Congress editor joining us from D.C. Thank you so much for the latest twists and turns on the impeachment hearings. Coming up next, Hong Kong braces for another day of disruption after more violence overnight. The latest developments coming up. This is Bloomberg.
Japão, mal, acompanha. O Japão.
This is Deborah Gager. I'm Heidi Stradwatts in Sydney.
And I'm Sherrian in New York. Let's get a quick check of the latest business flash headlines. Alibaba has started taking investor orders for its Hong Kong share sale, which could raise more than $11 billion and become the city's largest equity offering since 2010. It's offering 500 million new shares according to deal terms obtained by Bloomberg, and aims to price next week and start trading in Hong Kong on November 26th. Its New York listed shares have risen by a third this year.
The ongoing protests have forced Cathay Pacific to issue a second profit warning in less than a month. It's continuing to struggle with a slumping number of travellers due to violence. Cathay says second half financial results will be significantly lower than the first, using language that's even more pessimistic than last month's warning that the rest of the year would be, quote, incredibly challenging.
The unrest in Hong Kong has hit Canada Goose as well. Shares fell the most since August after it said the protests are hurting business and would mean a fall in revenue this quarter. Earlier, shares had risen on news that sales elsewhere in Asia were robust, with global revenue rising 28% to $220 million.
Well, Hong Kong is set for disruption again Thursday morning after another night of clashes between protesters and police. The government has ordered all public schools to be shut for the day, and political leaders are said to have discussed emergency powers last night. Our chief North Asia correspondent Stephen Engel is following the latest developments in Hong Kong. Steve, we're seeing the situation that's escalated this week where violence and unrest is begetting more violence and chaos. What's the latest that we have?
Yeah, I mean, this could be another disrupted morning commute for those who have to get to work this morning. We can talk about the more mundane aspects, the logistics, a nightmare, and then the more maudlin aspects. There was another death overnight. We cannot at this point attribute it to the protest just yet, but a black-clad man was found in a pool of blood after a presumed fall. This is in addition to a 70-year-old man who was hit in the head with a thrown brick. He is said to be in critical condition in hospital. Also, a 15-year-old reportedly had brain surgery late yesterday after having a fractured skull, being hit in the head with a tear gas canister. A lot of this action is happening on university campuses. It's happening actually all across Hong Kong. In the northern parts of the New Territories, where the Hong Kong University, or Chinese University of Hong Kong is, and it's been on lockdown, of course, the last couple of days with some of the more fierce standoffs and pitched battles between police and students who have kind of gone back and barricaded themselves on the campus. We're also hearing that Hong Kong University president has put out a note urging students not to provoke police to come onto their campus. We're hearing some other action at Baptist University. So there's a citywide university crisis, if you will, between protesters. Many of them are students, of course, and the riot police. All schools, primary, kindergarten, secondary, have been canceled today. This is the first time Hong Kong has ordered this in the 5+ months of unrest here in Hong Kong. In fact, Chinese University of Hong Kong has canceled the rest of the semester. The next term will not begin until January. So there is this fallout. As far as the logistics, some of the more mundane aspects of today, the MTR, that's the subway operator saying the Tung Chung MTR partially suspended. The East Rail Line from Sha Tin up to the Chinese border suspended. Mong Kok, Tuen Mun, Sai Yuan Ho MTR stations are closed today. Also, the Airport Authority of Hong Kong says it is aware of possible plans to disrupt traffic to and from the airport today.
Stephen Engel, thank you so much for that. Chief North Asian correspondent with the latest on Hong Kong. Coming up next, the San Francisco Fed president is calling for rates to stay on hold. Our exclusive interview with Mary Bailey next. This is Bloomberg.
Asia, I'm Jessica Summers with the first word headlines. Tesla's new plant in Shanghai has won permission to start mass production. It clears one of the last remaining hurdles to begin selling locally made cars in China. The mainland's first plant, wholly owned by a foreign car maker, is a crucial test of Elon Musk's bid to prove Tesla can sustain profitability. The company showed off the first Model 3S to be assembled in Shanghai earlier this month. Retail inflation in India quickened for a third straight month in October, reaching the RBI's medium-term target of 4%, and also potentially slowing the pace of easing. Consumer prices rose 4.6% from a year earlier, 0.3 higher than the median estimate in the Bloomberg survey. Food and beverage inflation is being fueled by a more than 26% surge in vegetable prices. And Fed Chairman Jay Powell is pushing back at President Trump's call for lower interest rates, saying that doesn't suit the U.S. economy at the moment. He told lawmakers that rates are probably on hold after 3 straight reductions, but he did signal that he's ready to act if the outlook for growth falters. Powell's comments largely echo his message last month when he noted continuing threats to the economy.
Our economy is in a strong position. We have growth. We have a strong consumer sector. We have inflation that's a bit below target. So the very, very low and even negative rates that we see around the world would not be appropriate for our economy.
Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is Bloomberg.
Jen, thank you. We're staying on the Fed. Jay Powell isn't the only top official who's reinforcing that rate cut pause message. San Francisco Fed President Mary Daly also said the Fed has done enough for now in an exclusive interview with Bloomberg Global Economics and Policy editor Kathleen Hayes, who joins us now in San Francisco. Kathleen, did Mary Daly add anything new for you when it comes to the Fed policy picture?
She absolutely did, and of course she started it by very carefully and repeatedly laying out all the reasons why the Fed, after 3 rate cuts, has done enough for now. Yes, there are downside risks. The Fed's eyes are open. She's a data-dependent Fed official like all the rest of them. Economy's in a good place, and for now, rates are where they should be. Let's listen to Mary Daly.
The policy accommodation we've taken, which has been 3 rate cuts this year, has put policy stance in a very good place to make that baseline come out where we need it to, which is slightly above trend growth and continued move up in inflation to target and further progress on full employment. So I do think of that as the economy's in a good place. Of course, we continue to be data dependent and look forward and look at the risks and see if that baseline changes even with this accommodation.
So is this a pause in the Fed's rate cut path, or is Fed policy? I'll tell you, a pause in we're cutting rates now, we're going to stop and see what happens. Or is the Fed at a policy crossroads? Where you're saying, do we go this way? Do we go that way? What needs to happen next?
Can I give you a third option? So my third option is where I am today, which is I see the level of the policy rate right now as appropriate for the economy we have, which is good consumer spending, good domestic momentum, but facing these headwinds, which have hurt business investment and manufacturing. So we are in a moderately accommodative stance, and that's appropriate. And so I feel we can stay in that stance for the period of time it takes to get inflation back up to 2% on a sustainable basis.
So then I would say what I'm hearing from you is you have paused. You've got a policy that looks appropriate. You're watching the data. And what you're trying to figure out now is, well, you're saying you probably don't have to do anything, but you're just as willing to say, oh, inflation's rising, I guess we're going to shift policy in that direction, as, oh, the headwinds have stirred up again, and we're going to have to go in the other direction.
Well, one of the things that we have to do is we look forward. And even though I characterize the economy as in a good place and policy is currently appropriate, we also look at the risks that could emerge. So on one side, you do have the potential for the accommodation we've given to spur the economy and the trade uncertainty settles and the stimulus that other countries have put in place works and we have some upside potential. But I think on the other side, there's some downside risks that could continue to emerge. We could come out with slower global growth than we penciled in. We could get a furthering of trade uncertainty. We still have the Brexit issue to settle. So I'm a little bit open to the idea that the risks are on the downside. But right now, I see the policy stance we've got as the right one for the risk that we have ahead of us so far.
One of the things I push Mary Daly on is this, Fed officials have said, absent a material worsening in their outlook, they are in a time of pause now. And so when I pushed her, she said, okay, the things she's looking at are trade uncertainty or trade negotiations seem to kick out further. And of course, we had a headline today about agriculture being a sticking point now in a phase 1 trade deal. And this starts to cripple how businesses work or business investment works, and the slowdown we see in manufacturing starts creeping over to consumer confidence. That could change the way I look at things. That could make me reassess the data. It's very important. The Fed's been counting on a strong consumer to keep the economy going. I think it's very important, she says, if you see this seeping from manufacturing over to consumer confidence, that's an issue. One more thing very important, Mary Daly touched on this, I think Jay Powell did in a way too, pushed about inflation. You said it's close to target, so I guess you could raise rates if you have to in the future. Basically, Mary Daly has said that she wants to see proof that inflation is rising. She wants to see it in rising wages, rising price inflation. For now, she says inflation has room to run. And I stress this because I think there's already people saying, well, if they're not going to cut rates, I guess they're going to start turning around looking at raising them. If you listen to what Jay Powell said about unemployment is not raising inflation the way it used to. If you look at Mary Daly said today, I think you see two Fed officials who do not seem at all inclined to look to raise interest rates right away. If anything, they're hoping these risks don't materialize. It would force them to cut them again.
Kathleen Hayes, thank you so much for that. Our global economics and policy editor joining us from San Francisco. Take a look at how markets are trading at the moment. It's a bit of a mixed picture with the ASX 200 under a little bit of pressure. We're seeing financials and materials leading the declines in Australia. Of course, the Aussie dollar and the stock markets could take a little bit more direction from that labor report coming out in about an hour's time. Now, we're seeing Kiwi stocks gaining 0.4%, rebounding from yesterday's losses after we saw the RBNZ unexpectedly keeping interest rates unchanged. Nikkei futures flat at the moment, not doing much. We do have in a few minutes Japan's third quarter GDP numbers, and U.S. futures also flat after stocks finished just below all-time highs. Coming up next, two of Japan's biggest banks reported profit falling in the second quarter. Can the firms reach their full-year targets? We'll discuss. This is Bloomberg. This is Deborah Geisha. I'm here in New York.
And I'm Hattie Stradwatts in Sydney. Well, Japanese banks are in the spotlight. Sumitomo Mitsui and MUFG both reporting lower quarterly profits on Wednesday. Mizuho's results are due out later. Joining us now from Tokyo is Morningstar Senior Equity Analyst Michael McDad. Michael, what are you looking for in this earnings season?
Okay, yeah, so we got Mitsubishi UFJ and Sumitomo Mitsui yesterday, and as you said, we'll have Mizuho and Japan Post Bank today. So I think that what we've seen is kind of what we expected, a very similar trend actually to the last quarter. So in terms of the bottom line, it wasn't a bad quarter, just in terms of how much profit was earned. Both MUFG and Sumitomo Mitsui have earned more than 60% of their full-year guidance 2 quarters in. So in terms of the bottom line, you wouldn't say that it was a bad quarter, but similar to last quarter, it was almost all driven by gains on sales of bonds after U.S. interest rates declined. And when you actually open up and look at the details, it's grim. It's not terrible, but not much different, and certainly not very many exciting parts. MUFG, all of its segments except global markets were down, and for SMFG it wasn't much different. Basically, we have the case where the retail business in Japan is struggling the most with low interest rates, and although cost cuts are coming through, revenues unfortunately are falling a little bit faster. And then in the international business, you do have growth at the top line, but then costs are also rising. So net, you except for the bond gains, there's really no growth.
Is asset quality becoming more of a concern?
It is, and we heard that on the earnings calls yesterday from MUFG. But it is at the level of being more of a concern rather than actually materializing yet as it is. So we saw, for example, MUFG or even we've seen some of the other banks where you start to see slightly higher credit costs, but the credit costs are not for specific borrowers that are actually deteriorating. It's more general provisions and preparing now for expected deterioration going forward. I think one of the things that could affect bank earnings related to credit costs, and we heard this also from MUFG, is not only could credit conditions deteriorate, but overseas the accounting standards have changed, and if you look in global provisions in Japan are not that high. So just to catch up, there could be some extra credit costs going forward.
We have Mizuho, of course, reporting this week. They have a relatively smaller exposure to the overseas markets. What's their growth potential there?
So Mizuho, at the end of last fiscal year, took some pretty big write-downs and basically, goodwill and writing down assets. Basically, they had invested in a number of systems, and they also wrote down foreign bonds. And basically, after that leaves them with a lower base of expenses. So I'm expecting Mizuho to be pretty much in line, and also similar to MUFG and SMFG to have benefited quite a bit from sales of overseas bonds.
So overall, it seems there isn't a lot of great news for these Japanese banks, and this GTB chart on the Bloomberg seems to show that we are seeing, of course, these banks struggling over the past decade, especially when compared to their U.S. and European peers. With valuations being this suppressed, could there be some room for opportunities here?
Well, there is something positive that change, and it's related to the overall push in Japan for improved corporate governance. What we're seeing for the banks is, even though earnings are not increasing, shareholder returns, dividends, and buybacks are steadily increasing. And moreover, as we have buybacks from these banks, increasingly we can see that when they buy back shares, they promptly cancel them. SMFG did that last quarter. This time, Sumitomo Trust, a smaller bank that also reported yesterday, did the same thing. So I think, if we start looking at shareholder returns and improved corporate governance, there is a positive story.
Oh yes, very good. They speak English.
What about
Yes, I do.
opportunities of global headwinds?
I speak English. CP.
So the
Profit
banks expanded quite a bit
at 1477.
2015 overseas, and
And gold.
MUFG, for example, is now just consolidated Danaman in Indonesia. The expansion in Southeast Asia continues. But whether that actually will increase earnings for the Japanese banks is a question. One of the trends that we've seen is, although net interest margins in places like Thailand or especially Indonesia are much higher than in Japan, it's a global trend for bank margins to be narrowing now. And meanwhile, you have the potential headwinds in the credit cycle. So although the proportion of international business has increased and is still increasing,
oh yes, thank you, Hong.
The profit driver rather would be expense cuts in Japan.
Michael, thank you so much for joining us. Morningstar's Michael McDad there with us. Let's get you a quick check of Places Business Flash headlines. BHP snubbed
We got the half just points over here. 1462 the gold.
At the end of the month, Canadian-born Henry previously led BHP's marketing division and coal operations, having joined the company in 2003. His elevation to the top job clears the way for a new executive to meet the challenge of a slowing growth situation and demand in China, the source of most of BHP's revenue.
Top Apple assembler Honhai Precision reported profit above expectations, indicating solid demand for the new iPhone 11. Net income was $1 billion in the third quarter, compared with forecasts of $900 million. Apple has forecast holiday revenue above Wall Street's projections, and its plan to launch 5G devices next year is expected to further lift suppliers such as Honhai and Taiwan Semi.
Tencent is going to have to wait longer for a long-awaited comeback after third quarter net income missed the lowest analyst estimate. Profit plummeted 13% in the September period as China's slowdown hit advertising and prompted charges within Tencent's investment portfolio. Meanwhile, costs jumped 21% as Tencent splurged on pricey content to feed its Netflix-style service. And we'll have much more on Tencent in the next hour of Daybreak Asia. SC Next Strategy Deputy Director AJ Sunder joins us with his thoughts.
And Japan's GDP growth likely slowed in the third quarter with a drag from net exports. Those numbers coming up next.
Pessoal, à noite, À noite o Dow acompanha muito isso aqui, tá, pessoal? Tanto o Dow como o ouro. O ouro e o Dow acompanham o Japão, tá, pessoal? Então o que o mercado do Japão faz aqui, vocês podem olhar que ele faz a mesma coisa no Dow. E no ouro faz ao contrário, tá? Inversamente proporcional. Dá uma olhadinha aí para vocês verem. O Japão Cash. Japan Cash. Dá uma olhadinha no Japão Cash. Sim, se for do Japão, é mercado asiático, né? Porque lá, pessoal, vocês têm que entender que lá já é de dia, né? O pau já tá torando lá.
Japan, we are getting third quarter GDP numbers, growth of 0.2% on an annualized, seasonally adjusted basis, quarter on quarter. Year on year, we're seeing growth of 0.3%. Now, quarter on quarter, we are seeing 0.2% growth, really missing estimates of growth of 0.9%. Now, this, of course, also deceleration from the previous second quarter growth of more than 1%. So we're seeing a second quarter of growth deceleration when it comes to the quarter-on-quarter numbers on an annualized, seasonally adjusted basis. Now, when it comes to nominal quarter-on-quarter numbers, growth in line with estimates, 0.3% growth. When it comes to quarter-on-quarter, just seasonally adjusted, 0.1% again, missing estimates. Of course, we have seen the negative effects on the Japanese economy from net exports probably being a drag. The economy, though, set to pull back even further in the fourth quarter, according to Bloomberg Economics, as we had that sales tax hike now taking a toll on spending. Let's get some immediate reaction
Veio para baixo,
to
ó,
the data.
o
Joining
PIB.
us now from Tokyo's Bank of America Merrill Lynch, head of Japan Economics, Izumi Devalier.
Yeah.
Izumi, thank you so much for
Era
joining us.
previsto
So
aqui
it's
a projeção
miss on
0,2,
quarter-on-quarter basis,
aí veio 0,1.
0.2%.
Acabou de falar aí agora, ó.
Why didn't we get any support from that front-loading
Então, o quê?
spending ahead of the sales tax hike?
Tá fraca, né? Tá desacelerado, né? Então isso não é legal, né? Aí já eles vão tomar uma porretada aí, quer ver?
We saw some very strong pickup in retail sales and department store sales in September. So I think there was front loading, but overall it is true that if you look at the quarter, the July-September quarter as a whole, front loading was a lot more subdued than what we saw in 2014. So that's one bit of it. And another thing I would say is that first half growth in Japan was actually pretty strong. And in particular, consumption and investment were particularly strong. So it wouldn't have, it's not entirely surprising there's been a bit of moderation from there.
What does it mean for the fourth quarter, though, given that we had that sales tax hike?
Well, ordinarily, if you look at this third quarter number and the absence of extremely strong front loading, you would think that the payback in the fourth quarter would actually be a lot milder. But we do think that fourth quarter GDP numbers will be quite weak. Would be surprised at all if we had a sizable contraction. And the reason is because, looking at the post-tax hike consumption dynamics, we only have October numbers so far, but that's showing a very steep drop in retail sales figures. And another issue is that we've had a series of pretty disruptive natural disasters hit the country in October, and that has lingering effects. So I do think that fourth quarter growth will be weak.
Yeah, it's interesting that because of the sort of post-typhoon recovery efforts and spending, I would have thought that would have fed through to a lot of the recent data sets, including this one, and we haven't really seen that. Just that breakdown, the private consumption quarter on quarter was lower than expected, 0.4%. Business spending on par with expectations, just shy of 1% clip there. I mean, does this suggest that we're still not really seeing a strong revival of animal spirits, essentially, in the economy?
Yeah, I mean, on the consumption side, I do think there were some statistical quirks as well. Like I said, the second quarter consumption numbers were particularly strong. So I think actually a little bit of that front loading got captured there. But you're right that right now, I think the one thing you didn't mention is exports. And the good news is that export growth has actually been stabilizing. We're starting to see an improvement in some manufacturing indicators. So it looks like we're looking for a gradual recovery in that area next year. But overall, the global demand environment is very weak. We still have a lot of uncertainties around the policy outlook in the United States and around trade wars. So I think it's very hard in this kind of environment to get that kind of strong, forward-looking investment from Japanese corporates and consumers.
How much of a boost then would, an easing in trade tensions be?
I think it would be very helpful because it would certainly remove a significant downside, risk to the outlook. However, what we worry about is even if the U.S. and China do strike a mini deal and we don't have further increases in some of the threatened tariffs, there's still going to be a lot of lingering policy uncertainty, not just associated with long-term U.S.-China relationship, but also the fact that we have U.S. elections coming up end of next year. So I don't think the fog around policy uncertainty will be completely lifted. Again, like I said, if the export cycle recovers, we are looking at a gradual pickup in growth into the Summer Olympics in Japan next year. But I don't think it's we can expect the kind of double potential types of numbers that we saw in 16, 17.
Talking about the Summer Olympics, are you worried at all about that Olympic cliff, especially if you see this boom and bust in construction?
Yeah, that's I think that's one narrative that we've been trying to push back against. It's referring to the fact that a lot of Olympic host cities, there's an impression that a lot of Olympic host cities suffer this sharp growth slowdown following the games. What we find is that actually that's not the case. That kind of Olympic cliff situation is almost always caused by very volatile swings in construction investment. In Japan's case, we actually have had a pretty strong run-up in construction investment, pretty much since Prime Minister Abe came to power in 2012. But it's been sort of, moderated by the fact that we have supply-side constraints in the construction sector. So we don't think, that there's going to be a big fall-off in construction after the Olympics. We think there's going to be plenty of demand from public infrastructure spending, especially with these natural disasters. There's a very solid pipeline of office development projects. So the construction side is fine, and I think we can avoid that kind of catastrophic scenario.
Izumi, does this level of sustained slowdown make you think that the Bank of Japan will need to change tack or add to what it's already doing?
No, I don't really think so. If this, so far the degree of the slowdown has been manageable. The labor markets haven't deteriorated significantly on the back of this. In fact, it's been kind of flat for the past 2 years or so. So I think bottom line is that we're going to need a much bigger shock, either in the financial markets or in the global growth environment, to prompt the BOJ to deliver essentially, additional easing, which would most likely be rate cuts. We weren't surprised at all that the bank held at its October meeting, and bottom line is unless the yen strengthens materially or we get further downside risk to growth materializing, we think the BOJ is on hold for the foreseeable future.
For the foreseeable future. Izumi, always great to have you. Izumi Zavalier, Bank of America Merrill Lynch, Head of Japan Economics. They're going through that preliminary GDP read. Lots more to come on Daybreak Asia over the next hour. This is Bloomberg.
Fala, Cristiano, tem facão no Forex não.
A very good morning, I'm Patty Stradwood in Sydney. Japan has just opened for trade.
Good evening from Bloomberg's global headquarters in New York. I'm Sherry Yan. Welcome to Daybreak Asia.
Our top stories this Thursday, more pressure on the Bank of Japan as the economy decelerates. Growth slowed last quarter as the sales tax hike loomed. The Fed chief pushes back at President Trump at negative rates. Jay Powell says they're not appropriate for the US economy right now. And Hong Kong braces for yet more unrest, with Cathay Pacific issuing a new profit warning. It says the protests are increasingly hurting their business.
Right, let's get a quick check of how markets are trading at the moment. We are seeing Japan coming online. We have seen a little bit of pressure for the Japanese markets. We are now seeing at the moment South Korea closed. That, of course, as we have the National College examinations. And they are going to start trading an hour later. But the Japanese market at the moment under a little bit of pressure with the topics below that 1700 level. The Japanese yen has been a little bit stronger the entire week. We had a third quarter GDP numbers out of Japan with the economy growing 0.2%, which was slower than expected. Let's go to our Asia Cross Assets Managing Editor Chris Anstey, who joins us now from Tokyo. Chris, so put these numbers into perspective for us. Are they as bad as a headline number suggests?
Yeah, 0.2% growth is never a good thing. But there are a couple of reasons why Japanese policymakers may not necessarily be overly concerned about this slowdown. So first of all, we've got a significant rundown in inventories. That's always a little of a quirky category. So when companies run off stockpiles of unsold goods, that actually detracts from growth. And so that's not necessarily something to be super concerned about. There was a hit from trade. That's not a surprise. The U.S.-China trade war continues apace, but we've seen some positive prospects for a deal on that score. So you stick those two to one side, and what we see is continued pretty solid business investment. So that's going to be encouraging to Japanese policymakers, particularly given the trade war is still on. And we don't see such a massive jump in consumer spending across the quarter. We certainly know there was a big one in September, as we had thought. So that potentially means less of a pullback in the fourth quarter, though, as Izumi Diwali was just saying, the fourth quarter numbers are not likely to be fantastic. Net, what does it mean? We've got Prime Minister Abe and his administration compiling a fiscal stimulus package now. The numbers are not so bad that it would argue for an even bigger package than is already envisioned, perhaps about 5 trillion yen, and that net means less pressure on the bond market.
And Chris, certainly not meaningful enough of a slowdown or a deterioration to move the needle when it comes to Bank of Japan?
At Bank of Japan, I think the bar is in the minds of most BOJ watchers very high to apply more stimulus and to cut the interest rate, which is already in negative territory. And with businesses continuing to expand their capital spending despite the slowdown, I think the Bank of Japan will say, unless we see significant hit to business confidence from the trade war, unless we see the yen strengthening towards 100 and endangering Japanese exporter profits, sending the stock market down, damaging consumer confidence, then we're happy to just keep warning that we'll be prepared to ease if necessary, but hold fire.
All right, Chris, appreciate you coming on for us. Chris Anstey, Asia Cross Assets Managing Editor there. Let's get you the first word news with Jessica Summers. Jess.
Thanks, Heidi. Meanwhile, Hong Kong is set for continued disruption Thursday morning after another night of protest clashes with police. The government has ordered all public schools to shut for the day, the first time it's done so since the unrest began. On Wednesday evening, riot police moved in to clear the streets across the city. Local media also reported that top officials were gathered at Chief Executive Carrie Lam's residence. The first public hearings in the formal impeachment inquiry into President Trump have heard from the acting ambassador to Ukraine and a senior official in the State Department's European and Eurasian Bureau. The two were asked if they thought Rudy Giuliani's shadow diplomacy in Ukraine was intended to dig up dirt for political ends. They both said yes. They both also denied being opponents of the president. And the devastating bushfires raging across eastern Australia have claimed another life. The body of a man was found outside the rural New South Wales town of Kempsey, about 280 miles north of Sydney. The state has borne the brunt of the fires, with 3 other fatalities in the past week. Emergency services are warning neighboring Queensland will see worsening fire conditions this weekend. And airlines and other operators of that Boeing 737 MAX are being warned to check any parts from a Florida repair station implicated in last year's Lion Air crash off Indonesia. The FAA alert says extra aerospace failed to keep proper documentation and didn't follow its own rules from evaluating parts and rehabbed. Extra worked on a sensor that failed on the Lion Air jet that crashed, killing 189 people. Extra cooperated with the FAA investigation, but said it disagreed with its findings. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is Bloomberg.
Fed Chairman Jay Powell has testified before Congress, basically confirming that his policy course remains largely unchanged and pushing back at President Trump's call for lower rates. Meanwhile, markets are also watching the latest developments in the trade talks. Bloomberg and Life strategist Mark Cranfield joins us from Singapore. Mark, so U.S. markets barely reacted to Fed Chair Powell's comments today. What are Asian investors watching right now?
They're certainly watching how the repricing of the interest rate curve is taking place. So one of the noticeable things that we've seen since that Fed decision in October is that the futures market is pricing out the chances of further rate cuts. They really seem to be believing Jerome Powell and his colleagues that the message is that there's going to be a pause in December and possibly even beyond that, subject to the data. So the markets are really now taking that to heart. And obviously, if you look at the forward curve now in the futures market, it still suggests a possibility of one more rate cut towards the end of next year. But that's a big change from what we were seeing just a few weeks ago, where as much as 4 interest rate cuts were priced into the market. So Powell is trying to give that message that 75 basis points of cuts is enough. It's an insurance policy which will do the job, and now he'd like to see that feed into the markets. So as far as Asia is concerned, they'll be looking to their own central banks to see whether or not they have further room to ease or not. I mean, indications are, we saw New Zealand yesterday hold rates. So it could be that Asia's getting close to its own period where it takes more time to digest the data. There are a couple of specific cases in Asia where the economies are obviously a bit soft. South Korea is one, and we just had the Japan GDP data, which was certainly disappointing. So we expect more stimulus in Japan as well. But in general, the Fed is trying to give a picture that maybe the bottom has been reached and that the global economy can start to turn slowly in an upward direction and need less monetary policy stimulus in the time being. So it's a steady as she goes message from Powell.
Right, and in terms of the kind of, I guess, dynamic that we're seeing in US trading these days, we ended higher despite what seemed to be a pretty negative trade headline about the agri purchases. Are investors just kind of trading water? There's still a fair degree of optimism that we'll see this deal done.
I think the traders in the States in particular are getting a bit tired of these unnamed source reports and trying to pour cold water on the trade deal. They know who the key players are. Donald Trump and people like Li He from China, they're the guys that really matter. it does appear that the talks are still ongoing and they are moving towards this so-called phase 1 deal. Until something categorical is heard from the big players that all the talks are off or that everything has fallen apart, traders are just kind of shrugging their shoulders. They're getting a bit tired of all this noise coming from the sidelines, and they're more focused on where the end game is. Of course, in the short term, it causes a bit of volatility and you get some pretty erratic trading on an intraday basis. But overall, people have dealt with the trade issues that have been so far. We've had trade tariffs now for well over a year. Those have been digested. Companies have got used to dealing with it. They've found ways around it. The global economy is certainly moving at a slower pace, but it hasn't stalled completely. Some people were scared the global economy would come to a complete standstill. It hasn't done so. Companies are still making money and business is getting done. That's reflected in the way the S&P keeps on creeping higher. It will take a lot to derail this rally that we're seeing in America, unless Donald Trump in the near term says, okay, everything's off and I'm increasing tariffs across the board on China. There's no particular reasons to suggest the global economy is going into recession.
Alright, a Bloomberg M Live strategist Mike Cranfield there with us, and you can follow more on this story, all the day's trading action on our Markets Live blog. That's on the Bloomberg M Live Go. You can get a market rundown, of course, in one click. There's ongoing commentary and analysis from Bloomberg's expert editors. You can find out exactly what's affecting your investments at any point in time. Well, still ahead, Disney soars to a new record after its new streaming service drew in 10 million users.
But up next, we'll be joined by Capital Economics' Julian Evans-Pritchard to get his outlook on China and the upcoming data dump due later today. This is Bloomberg.
A Disney vai lançar stream. Eles não têm chance.
Ah, é?
Stream filmes. No Netflix é stream filmes. E a Disney vai lançar um stream filme só para os filmes dela. E a Netflix vai ter que tirar.
Gente?
Os filmes tudo.
Nossa, aí.
Tem que tirar os filmes da Disney.
Eu me informei do negócio do seguro lá. O seguro do INSS. Sabe? Gatinho, o Brasil ele tem convênio com alguns países.
Nós já temos
Não, eu sei.
já está tudo lá.
Eu sei. Pois é, não me explicar ainda não.
Porque se precisar, tem que usar
O Brasil ele tem convênio com alguns países. E se por um acaso você ficar doente, você informa todo mundo no hospital lá do país, né? E você é atendido. No sistema público, sem pagar nada. E você é atendido no sistema público, sem pagar nada.
And take a look at Rakuten, the e-commerce giant right now, falling the most since September. This would be a fall of more than 5% after we had some news that potentially the former Yahoo Japan SoftBank's internet business Z Holdings could be in final talks to merge with the messaging service Line. This according to the Nikkei newspaper, although SoftBank has come out saying that there has been no decision on Z Holdings and the Line merger. We are seeing e-commerce giant Rakuten now falling the most since September hiding.
All right, and Jerry, of course, a big data dump from China is out later on today, reporting fresh numbers for October industrial production as well as retail sales, as well as fixed asset investments. Some new insight perhaps into the impact of the continuing trade war. Our next guest says that despite being resilient recently, it's hard to see how China can avoid a slowdown in the coming quarters. Let's bring in Capital Economics senior China economist Julian Evans-Pritchard. Julian, we are expecting pretty broad-based pressure across retail sales, across that pullback in industrial output, as well as perhaps some stabilization in fixed assets with fiscal support on that side. But what are we seeing in terms of the outlook, and is there an issue with transmission? Because we haven't really seen a substantive pickup in growth despite the targeted easing from the PBOC.
Well, we actually think the early indicators point towards a slight pickup in the data that's going to be released this morning for October. I mean, we've had an improvement in the sizing PMI and metals prices, which would usually suggest that industrial production strengthened. That said, I mean, we're less upbeat on the outlook. A lot of the recent strength in the Chinese economy is being driven by property construction. With now construction growth expanding at a much faster pace than sales. And that simply doesn't look sustainable, and we're starting to see signs in the land market from property starts that construction cycle is slowing. And certainly, even though the trade tensions are now easing, I think the reality is that actually the tariffs have not been as significant as a drag on China's economy as many feared. The flip side to that, of course, is even if we do see a partial reversal in some of those tariffs, it's not going to provide a significant boost. And I think the key driver of growth over the next year is going to remain those domestic factors. And at the moment, the construction cycle seems to be turning down, and monetary stimulus doesn't seem to be driving a rebound in credit growth. So it's hard to see what could drive a strong recovery.
How difficult is the policy balance at the moment, or striking that policy balance, given the spike in the all-important pork price?
Well, I think that it will be wise for policymakers to look through the surge in pork prices. The rest of the inflation indicators actually point towards easing inflation. And so just as most other central banks will hike rates in response to higher oil prices, I don't think the central bank in China should necessarily respond to higher pork prices. If anything, the broader indicators suggest that
em dólar, 150 mil dólares, e em euro também, 150 mil dólares.
But when it comes to more policy easing, of course, we have seen that one-year medium-term lending facility being cut. So does that mean we could see the loan prime rate also being tweaked?
So I think it's very likely that next week, when we get the loan prime rate, we'll see a similar reduction to the MLF rate, since the loan prime rate is anchored to that MLF rate. And I think more generally, I think the MLF reduction was intended as a signal to the bond market that the PBOC wasn't happy with the sell-off there and the pickup in yields, and it doesn't actually want monetary conditions to tighten, given the ongoing weakness in the economy. And I think the bond market's getting ahead of itself a bit, expecting growth to bottom out, for there to be no more monetary easing. We certainly think that the PBOC will have to do more, and that government bonds in China will rally over the next few months.
How concerning is the sharp fall that we saw in October social financing, particularly when it came to those new yuan loans?
Well, I think it's a reminder that the monetary transmission mechanism is not really working properly at the moment, and one reason for that is because regulatory stance on areas like shadow banking and also allowing more defaults in the bond market has made it non-bank financing much less sensitive to interest rates. I don't think there's a willingness to roll back those tighter regulations, and so in order to support credit growth, you need more sizable reductions in interest rates. So if anything, I think that strengthens the case for additional easing in order to prevent credit growth from slipping too quickly. Because if credit growth continues to slow, that creates additional downside risk for the Chinese economy over the next few quarters.
How strong is the Chinese consumer at the moment? Because when we see, say, results from Alibaba, they don't seem to be doing that badly.
I think there are pockets of strength, but overall, the consumer sector looks pretty weak. Retail sales growth has slowed quite significantly over the past year or so. We've already had car sales figures for October. Those were still very weak. I think, initially perhaps it was some of the trade tensions that were weighing on consumer sentiment. I think more recently now, even though trade tensions are easing, the surge in consumer price inflation is an additional drag. And I think until the labour market starts to recover, consumers are going to remain cautious and consumption growth will remain relatively weak.
All right, Capital Economics Senior China economist Julian Evans-Pritchard there joining us with a preview of those domestic activity indicators we're expecting out of China later on today. Thank you so much for those views. Just another alert coming from Hong Kong. The MTR subway operator saying part of the West Rail line is now suspended as well, in addition to a number of other disruptions and closures to its services, citing vandalism to parts of the subway in Hong Kong. We're also expecting potentially another day, a third day this week of unrest and disruptions in the city. This is Bloomberg. Breaking news, take a look at those stock moves. Huge. Z Holdings now rising more than 17%. This is, of course, on news that they could potentially be merging with Line. This Line at the moment untraded, but it's bid near the upper limit of those merger talks. Now, Z Holdings is the SoftBank's internet business and is the former Yahoo Japan. Now, they're in final talks to merge with the messaging service Line. And take a look at Rakuten, which is falling the most since September because they are an e-commerce giant, which is also Line's competitor. Rakuten owning Viber, which is a messaging app widely used in Southeast Asia. So they're taking a big hit on news that SoftBank is considering a plan to consolidate its Yahoo Japan internet business with the messaging service Line. Now, over here in the U.S., Disney has shares soaring to a record high. This after 10 million fans signed up for its new video streaming service in just 2 days. There were also a lot fewer complaints about glitches. Bloomberg Sue Keenan has more on this. Sue, it's been huge, right, for Disney? I mean, we didn't expect that they would get to 10 million this fast.
No one seemed to expect that, and so the headlines now are Disney dazzles. Yesterday it was Disney Plus becomes Disney Minus. What's really fascinating here is that the subscribership record pace is now at such a blistering pace. Analysts say they could meet their goal which we'll get to in a bit, in 2 years as opposed to 4.5 or 5 years. We're looking at a 20-year chart here. The stock was pushed to an all-time record. At one point, it was up 7% intraday. If you look at what the trends were, many of the rabid fans of Disney products had the chance to pre-order months in advance, and so that perhaps was obscured by all the stories about the glitches yesterday on day one. Disney has been able to deal with a lot of those glitches, and what we really saw earlier in the session was the shares were down. Disney came out and touted its 10 million figure, and then look how the rivals reacted. Disney shot up at one point as much as 7% intraday. There it is, closing above 7%. Netflix and Amazon down. Notably, analysts pointed out that Amazon Prime did not have this many viewers early on. And also interesting trend is that what Disney gains here is not only a lot of cred for the CEO, Bob Iger, who really staked his legacy on the video sharing, but it allows them to bundle together products for ESPN and Hulu as well at a slightly higher price.
Yeah, in terms of the reaction in Netflix shares tumbling, how big a threat is the new Disney Plus?
Well, a lot of investors are trying to determine that, but if you take a look at some of the numbers that are out there, one analyst, and that's Wedbush Securities, is estimating that the strong initial interest in Disney could lead Disney hitting its target of 60 to 90 million in 2 years, much quicker than expected. It could also mean that Netflix would lose as many as 10% of its customers, that they could be lured away by rivals like Disney. There you see the huge spike in the shares as a result of this much stronger than expected debut.
All right, Sue Keenan, thank you so much for that. A quick check of the latest business flash headlines. There are calls for Google's proposed acquisition of Fitbit to be blocked. A group of US privacy and consumer campaigners are calling on antitrust enforcers to prevent the deal on concerns it will further consolidate the search giant's control over consumer data. The $2 billion takeover would give Google access to activity data from Fitbit's more than 28 million users.
Starbucks rival Luckin Coffee released better than expected revenue in its second set of quarterly results since going public. Net revenue was about $220 million through September, $10 million above the average estimate. However, Luckin's net loss widened to $75 million from $70 million a year earlier. Investors have questioned its strategy of burning cash to lure coffee lovers away from Starbucks. Chinese cloud fintech platform OneConnect Financial has filed for a US IPO 9 months after reports it had been looking to list in Hong Kong. The listing will be on the NYSE or NASDAQ with a placeholder offering size of $100 million. OneConnect is an affiliate of Ping An Insurance and is backed by SoftBank's Vision Fund. It had a net loss of almost $150 million in the first 9 months of the year. Well, coming right up, cutting down to the ever-volatile jobs data out of Australia. We'll be breaking down those numbers for you as they cross the Bloomberg next. This is Bloomberg.
we are getting just the latest numbers out of Australia when it comes to this ever volatile series of jobs numbers. Just trying to get the numbers up for you at the moment. We haven't seen a great deal of change when it comes to these numbers. They've remained fairly steady even as the RBA has been cutting. Employment coming in at a contraction of 19,000 jobs in October. Estimate was for a gain of 15,000. So speaking of that volatile nature of this series, a contraction of 19,000 jobs in October when we're expecting a gain of 15,000 jobs to be added to the economy there. The participation rate just dropping slightly at 66% in October. The estimate was for 66.1%. The jobless rate at 5.3%, so ticking up from that 5.2% where it's been hovering for the past few months. Full-time employment falling just over 10,000 jobs, and part-time employment also falling by 8,700 jobs. Employment, though, that headline number, a contraction of 19,000 positions in the Australian economy. The Aussie dollar dropping just about 0.5% as the jobs number has unexpectedly decreased. Given that we have seen unemployment holding pretty firm, we have seen rising participation rates boosting labour supply, as well as jobs ads increasing. A lot of economists expect that the labour market could start getting a little bit more problematic for the RBA in the coming months, but certainly a reaction there in the Aussie dollar as we saw that contraction in the labour employment situation. 19,000 jobs lost from the economy in October. Let's get you the First Word News with Jessica Summers. Jess.
Thanks, Heidi. Well, Japan slowed again in the last quarter as the global slump continued to hurt exports. However, consumer spending before last month's sales tax hike and stronger corporate investment prevented an even sharper deceleration. GDP grew at an annualized 0.2% in the September period from the previous quarter. Economists had forecast an expansion of 0.9%. Retail inflation in India quickened for a third straight month in October, reaching the RBI's medium-term target of 4% and potentially slowing the pace of easing. Consumer prices rose 4.6% from a year earlier, 0.3 higher than the median estimate in a Bloomberg survey. Food and beverage inflation is being fueled by a more than 26% surge in vegetable prices. Tesla's new plant in Shanghai has won permission to start mass production. It clears one of the last remaining hurdles to begin selling locally made cars in China. The mainland's first plant, wholly owned by a foreign car maker, is a crucial test of Elon Musk's bid to prove Tesla can sustain profitability. The company showed off the first Model 3S to be assembled in Shanghai earlier this month. It's humans 1, robots 0. After years of trial and error, Boeing is dumping the robots that build sections of fuselage for the 777 family. It will now rely on skilled engineers to manually insert fasteners into holes drilled on the plane's body by a machine developed on the Dreamliner project. Boeing says the shift to humans began in the second quarter and should be complete by the end of the year. Global news 24 hours a day, on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is Bloomberg.
Jess, thank you. Hong Kong is set for disruption again on Thursday morning after another night of clashes between protesters and police. The government has ordered all public schools to shut for the day, and political leaders are said to have discussed emergency powers last night. Our Chief North Asia correspondent Stephen Engel is following the latest developments in Hong Kong. Steve, what do we know?
Yeah, well, for the first time in the more than 5 months unrest, all schools here in Hong Kong, so kindergartens, primary schools, also secondary schools will be closed today. Also, Hong Kong University and others have canceled the semester, so many university students will not be going back to class until January. Of course, much of this unrest in the last few days has been centered on the university campuses. There are 8 governmentally subsidized universities here in Hong Kong, and many of them have seen a rise of unrest actually on the campus greens, including Hong Kong, Chinese University of Hong Kong. And that emergency meeting that was held last night, reportedly with Carrie Lam, the chief executive, and her top officials, supposedly centered on what emergency regulations she could invoke to quell this rise in unrest, which is now, of course, spread for a 4th consecutive day during the midweek period. Usually it's been contained to the weekends. There was a general strike called on Monday, and that has continued on for the last this would be the fourth consecutive day, including here in Central, where there were protests, there was some vandalism, there were arrests by these riot police. Again, there are more injuries also being reported, including another death, which we cannot necessarily at this moment tie to the protest, but a black-clad man was found in a pool of blood after a presumed fall. We do not know whether he was a protester or not. A 70-year-old man also said to be in critical condition in hospital. He was hit in the head with a thrown brick, and a 15-year-old is also in hospital undergoing or having undergone brain surgery after suffering a cracked skull from a canister, a tear gas canister fired by police, hit him in the head.
And Steve, in the meantime, we are seeing strong rhetoric coming from U.S. lawmakers. Senator Marco Rubio now tweeting that they made very significant progress today on the passed Hong Kong Human Rights and Democracy Act in the Senate. Of course, this has already passed the House. How significant would this be?
Well, this would be very significant at a time, of course, where the White House is trying to strike an interim or temporary or phase one deal, I should say, trade deal with the Chinese. This could actually exacerbate the problem and the tension and spark retaliation from Beijing. We don't know what kind of retaliation, but already Mitch McConnell, the Senate Majority Leader on Capitol Hill, saying Beijing, he denounced Beijing's insatiable thirst for control of Hong Kong. And of course, this bill would also subject the U.S. trade privileges that it bestows on Hong Kong to an annual review, as well as possible sanctions against Chinese officials or Hong Kong officials deemed by Congress for being responsible for undermining Hong Kong's level of autonomy. So this could absolutely be a destabilizing factor, even though the United States Congress saying they want to show a level of support for the protest movement.
Stephen Engel, thank you so much, our Chief North Asian correspondent with the latest on Hong Kong. Also destabilizing for the markets. We have seen all this unrest really putting pressure on the Hang Seng Index, which has barely hold on to those gains for the year, as opposed to mainland markets up more than 17%, or the S&P 500, which is near record highs. And before the protest started, before June, if you see the correlation there with the S&P 500 was pretty high. So if you have a good night on Wall Street, that would mean perhaps you'll have a very good day on the Hang Seng Index as well. Well, you can see that the two have diverged, and the correlation now is falling highly.
Yeah, and of course, corporate heads are concerned about the situation as well. We had another profit warning from Cathay Pacific. They're clearly the hardest hit, but airlines in general getting concerned about the situation there. Earlier, Qantas CEO Alan Joyce spoke to Bloomberg TV about the impact of the protests in Hong Kong on his business.
Well, we did a quarterly update a few weeks ago, and we said it was going to impact our business by around $20 to $25 million. We saw a 15% drop in volumes. We're managing it. We're using a smaller aircraft with the same frequency, so we're just taking it by month now and deciding what we do with capacity as we see how the situation in Hong Kong.
Fairly dynamic situation. Do you think permanent damage is being done?
So, it's hard to say. I mean, who knows how long this is going to take to resolve. If it does, maybe one of the beneficiaries in the longer term will be Singapore. And certainly for airlines like us, we have a bigger presence in Singapore. We've got Jetstar Asia based there. We have a bigger operation from Australia to Singapore. And if that is the beneficiary out of that, it just means traffic moves from one city to another.
And I want to ask you about another thorny subject, and that is the potential for the MAX aircraft to become part of your fleet domestically in Australia. Is the brand a little too toxic right now? Are you waiting to see what happens with the public before you make a final decision?
Well, Vonnie, I'm a big believer that Boeing are a great engineering company and they'll fix this. We've seen problems with other aircraft in the past, and next year will be doing a competition between Airbus and Boeing to replace our domestic fleet with 75 737 NG aircraft, with 21 717s and 70 F100s that over the next few decades have to be replaced. And we think if Boeing commit to the 797, the NMA, and the MAX, that will be a viable alternative to the A321s and A320s that Airbus have. So we think Boeing will fix this, and we think there will be a good competition next year between the two groups.
Qantas Group CEO Alan Joyce, and plenty more to come on Daybreak Asia, including details on WeWork's huge quarterly loss. This is Bloomberg. This is Daybreak Asia. I'm Heidi Stradwatts in Sydney. And I'm Sherwayan in New York. Office sharing startup WeWork continues to burn cash, more than doubling its loss in the last quarter. The shortfall ballooned to $1.25 billion through September, as WeWork spent big in anticipation of an IPO that was ultimately pulled. Bloomberg technology startups reporter Ellen Hewitt joins us now from San Francisco. Ellen, so are these numbers surprising at all, given what we already know about WeWork?
Well, it is interesting to look at these numbers in context of what WeWork expected to happen in 2019. So, you know, summer they were anticipating an IPO in September, so they had ramped up spending in an attempt to prepare to have great top-line growth for the first couple quarters as a public company. This is something my sources have told me came from the top. This was Adam Neumann's plan to have WeWork sort of come out of the gates very strong as a public company. Of course, as we all know, that plan didn't come to fruition. The IPO was pulled, and instead you see WeWork showing these growing expenses, even at a time where they talk about wanting to get profitable. That's probably what's driving this huge bump in loss for the third quarter as compared to both the year before and even the quarter before.
All right, so did we get much indication about the way forward out of this situation?
That's something that the new leadership at WeWork has been talking about a lot the last couple weeks. So keep in mind they still have these two new co-CEOs who had replaced Adam Neumann when he stepped down. They also have a new executive chairman of the company, Marcelo Claure, who was installed by SoftBank. And as we reported earlier this week, they are continuing a search for a new CEO, including names such as John Legere from T-Mobile. This is something that they're going to be looking to fill in the next few months, and it's going to be a tough position. This is someone who has to come in and be CEO of a pretty troubled company and, you know, execute a turnaround in which the company goes from, as we mentioned, burning $1.2 billion in a quarter to becoming profitable, which is what they've said is the new goal and new North Star for WeWork.
All right, Bloomberg technology reporter Ellen Hewitt there. We'll stay on tech. It's getting harder to believe in Tencent's comeback. Profit plummeted at 13% last quarter, worse than the most pessimistic analyst forecast. We're joined by our Asia Technology Executive Editor, Peter Elstrom. But what's the bottom line in these results for Tencent?
Well, as you pointed out, they were bad. I mean, 13% down is bad for the company. One of the analysts called it dismal. This really reflects the difficulties of being in the content business in China right now. Tencent saw its media ads drop 28%. They also have this category they call other gains, which is typically the profits that they take from startups they invest in. That went down 90%. So it's been kind of a difficult period for the company. This company, of course, long contended with Alibaba as the most valuable company within China. It's now fallen far behind Alibaba as it's faced these challenges across a range of businesses. One of the bright spots, though, is they did an adaptation, a smartphone adaptation of their game Call of Duty, which has taken off quite a bit. So there is a sliver of hope here that they may see a rebound in the near future.
Tell us more about progress in the content business.
Well, again, it has been pretty difficult for them for a number of reasons. China is an unusual market. It's the biggest gaming market in the world, but it also has challenges because of the government involvement in that category. There was a freeze on games last year that really hit their games business. Tencent's the biggest games company in the country. And then also Beijing came out with a cap on the amount of playing time that younger kids can use on their games. So that has hit Tencent also. And then on top of this, Tencent has been moving into other kinds of online content, including NBA games. So the tweet from the Houston Rockets general manager created an enormous controversy within China, in particular when the general manager voiced support for the Hong Kong protests. That has caused a lot of blowback. In fact, the state-owned media have stopped broadcasting NBA games. Tencent has continued to show those games early on in the season, but it's not clear at this point whether it's going to be able to continue going forward. This is very important. They spent $1.5 billion to get exclusive rights to these games, so they want to be able to show them. Basketball is very, very popular in China, or has been, but it's not clear exactly what the path forward. So that's just a reflection of these challenges in the content business for Tencent right now.
Peter Elstrom, thank you so much for that. Asia Tech Executive Editor. Joining us now from Singapore is SC Next Strategy Deputy Director Ajay Sander. Ajay, great to have you with us. Given all of the challenges that Peter just mentioned, we are seeing on this GTV chart on the Bloomberg that analysts are the least bullish on Tencent in over 3 years. Are they right, or are there some bright spots that you could bank on?
No, I don't think it's all curtains for Tencent. I think if you look at Tencent's the product portfolio, the 4 segments they're operating in, gaming is the biggest, accounting for close to 30% of their revenues, and then advertising around 19%. These are the 2 segments which are struggling right now, and for various reasons. I think gaming, as rightly pointed out, is a tough business. You need to have blockbuster titles, and Tencent has had a couple of blockbuster titles. I think the PUBG has been a big hit. But what's happening globally, not just in China, is that gaming is getting a lot more under the regulatory scanner. Some of these games, like PUBG was a big hit in India, and the Indian regulators are actively thinking about how addictive these are, especially to the student community. Right? So that will be increasingly a big challenge. The ad business also, I think what we're also seeing is that many of the digital agencies and the traditional corporates are also looking at what's the best bang for buck in the advertisement. Right? I think traditionally they just looked at mobile, and it was a plethora of platforms. But now some of these new platforms coming in, TikTok came out of nowhere and has become a big success. And what we're seeing is a shift in the model of where the digital agencies are spending. And it's a lot more going to be these short video content, the live video streaming kind of content formula. That's where I think Tencent doesn't have that much portfolio and it's struggling with advertising business. But the other 2 portfolio elements, I think the social media as well as the business, they are growing well. I think the fintech has grown well for them. It's shown 36% increase year on year, and that's the brightest spot. I think that's one area where they would really want to be aggressive, especially in the Asia Pacific market.
What about the NBA controversy? How much has that hit them?
It has hit them, to be frank. As I said, I think gaming is a very content-driven business. You need one or two blockbuster titles, and the volume which Tencent is playing is every quarter they need a blockbuster title, and LV was one of their flagship titles which they were hoping, and with the whole controversy it has slowed it a bit down, but I think it just maybe a matter of one more quarter for things to get pulled down. But that will be one flagship title, and they've already pumped more than $1 million in that, in terms of content, in terms of the various exclusive partnerships. So I'm sure they will be hoping that they can revive the NBA title a lot more aggressively the next quarter.
AJ, I want to throw up a chart that, basic question as to whether it's sort of a victim of its own success, right? In terms of the growth that Tencent has had as a company since 2004, I should say, it's grown to 300 times the size that it was. So as a result, you are seeing slowing sales growth, slowing revenue, falling margins, all of these pressures. Where do they find the next area of growth? Is internationalization of their business somewhere that they can look to?
Yeah. I think they will be aggressively looking at internationalization. I think China, for all it is, it's a big market, but I think it is at that stage where they have to forcefully look at international markets. That's going to be the next growth driver, but that's also going to be challenging because some of these markets, like Tencent is aggressively looking at Tencent Cloud, they're looking at WeChat Pay, WeBank, all of these drivers coming out of China, looking at it as an international markets, looking at, say, Southeast Asia, emerging countries across the globe, will have its own set of dynamics, own challenges, which will be very different. But I think they will have to do that, and they will have to be a lot aggressive around these emerging markets. That's going to be the next growth driver for them. But you're right in the sense that they're a victim of their own success. But they don't have to be. I think one of the other things which will actively be discussed now is whether the sum of parts is more valuable than the overall part. And what I mean by that is, in India there is the case where, Flipkart, the e-commerce platform, has siphoned off PhonePe, which is the payment platform within it, and then there's a huge valuation just for the payment platform. Whether that works for Tencent, whether, let's say, the financial services part, standalone is maybe a more valuation game, is a better game for them to siphon off that separately. They've already done it with music. Is there a strategic play, is there a financial play like that which could be a better valuation play for them? I think they will have to actively start looking at those aspects also.
Does an easing of the trade tensions make a material difference to the outlook?
I would say less to Tencent than to the Alibabas and the Baidus. Tencent's the portfolio is a lot more diversified, and I don't see them that being restricted from the trade platforms or the trade conflicts as much as, say, Alibaba, where a significant portion comes from e-commerce, right? So any change in tariffs has a direct impact to their top line and bottom line. Whereas Tencent is a lot more diversified. But I think the regulatory aspects is something, especially for gaming, for advertisements, which is a lot more challenging for them in terms of international markets.
Right, as the next strategy deputy director, Ajay Sander, thank you so much for the latest on Tencent. We have more analysis on the company ahead. Ample Capital's Alex Wong joins Markets China Open later today. And take a look at live pictures out of Bolivia. You're taking a look at the interim Bolivian president, Janine Áñez Chávez. She's being sworn in. A new cabinet is being sworn in at the presidential palace in La Paz. Of course, we know that Evo Morales, the president of the country for over a dozen years, has stepped down this weekend and has fled to Mexico. He's called the new government unconstitutional, saying that her government is unconstitutional, and has urged his backers to disrupt the new government. But we're seeing now the new cabinet there being sworn in. Plenty more to come on Daybreak Asia. This is Bloomberg.
to struggle with a slumping number of travelers due to the violence. Cathay says second half financial results will be significantly lower than in the first, using language that's even more pessimistic than last month's warning that the rest of the year would be, quote, incredibly challenging.
The unrest in Hong Kong has also hit Canada Goose. Shares fell the most since August after it said the protests are hurting business and would mean a fall in revenue this quarter. Earlier, shares had risen on news that sales elsewhere in Asia were robust, with global revenue rising 28% to $220 million.
Japan's leading messaging platform Line says it's in talks with the former Yahoo Japan about merging their operations. Renamed as Z Holdings, Yahoo is now SoftBank's internet arm, while Line is controlled by South Korea's Naver Corp. Line struggled after going public in 2016, but those shares have now climbed about 21% this year in Tokyo. Z Holdings also gaining about 40% in that same period. Let's take a look at how those stocks are performing in the current session. We're seeing Line unchanged at the moment. Yahoo Japan, though, seeing upside of over 15% so far this session as we get this news that SoftBank is reportedly considering a plan to consolidate its Yahoo Japan internet business with the messaging service Line Corporation sharing.
Right, and take a look at the markets trading at the moment. We are seeing Nikkei under a little bit of pressure with real estate and materials leading the declines. Although the ASX 200 has now reversed those losses and is gaining 0.2%. Kospi futures unchanged. They open at the top of the hour. National College Examinations Day there. This is Bloomberg.
Olá pessoal, vai começar a abrir o mercado asiático aí, vai dar uma osciladazinha boa. Abriu aí, ó o asiático. Vamos ver, uma oscilada boa aí. Ó a porrada no ouro. Vamos ver se volta. Tem compra aí, pessoal. Quem não entrou no ouro, ó, dá compra.
It's 9 a.m. in Beijing, Shanghai, and Singapore. Welcome to Bloomberg Markets. China Open. I'm Selena Wang.
And I'm
Singapore Open.
Trade on Hong Kong and mainland markets. Here are the top stories. Markets await the latest data dump from China. Analysts expect growth will have slipped below the government's 6% target.
The Fed chief pushes back at President Trump and negative rates. Jay Powell says they're not appropriate for the U.S. economy right now.
And Hong Kong braces for more unrest, with Cathay Pacific issuing a new profit warning. It says the protests are increasingly hurting business.
Rhetoric on the trade war again, with Trump saying they're moving along, reports coming out they're hitting snags on farm purchases, which we thought was going to be the low-hanging fruit, easy part of the agreement, right?
Olha, nós temos grupo aí no Forex.
But it seems like there are some friction there as well. So does that make this whole FOMO rally a little bit harder to reach more highs here? That's going to be the big question for investors. So we are trading lower here today. The next catalyst perhaps is going to be that China data dump expected to come out in the top of the next hour here. So everything from retail sales. We'll break it down for you in a little bit. But we are seeing here a mixed picture here when it comes to equities. 225, we're just lower by 10%. The Kospi opened up here 1 hour later here today because of the nationwide college entrance exam. And Taipei, we're watching closely Hanhai as well. We're pretty big here on earnings here thanks to that iPhone 11 demand, and A50 futures are pretty much flat here at the get-go. A lot of movement when it comes to bonds. Some of the boards will show you what's been going on in fixed income. Just when we were thinking about yields, we're melting up higher. We did see a bit of a turnaround here overnight. U.S. 10-year yield, we're back below 190 now, 188. The inflation picture seemed a little bit mixed here. We did see it unexpectedly cool in the U.S. and we did see that sell-off in Germany. I should say that buying in Germany as well. Aussie 10-year yield, we're at 120.
Chegar aqui e vender o dólar, tá, pessoal?
It's interesting too with UBS actually saying that they expect
bater aí, vende, hein?
to hit 0.5% next year if the U.S. and China fail to resolve their trade dispute and existing tariffs stay in place. So there's still plenty of people willing to put money into bonds. And JGB is unlikely, it seems, to be hitting that 0% threshold here after that GDP miss that we got. Only rising 0.2% for the third quarter, which was
vai voltar.
There. Flip the boards, we're going to show you what's
vai voltar.
Not a whole lot besides the fact that the dollar is up.
Vai voltar.
We're extending that just slightly here for the Bloomberg Dollar Index above 1,200. Offshore renminbi at 702. Keep in mind we have a Philippine policy decision from the central bank here today, and largely expected not to do anything and keep things on hold. But inflation in India certainly one in focus here after it did break above that threshold for the RBI and the government here. So we're watching the rupee quite closely here. The offshore weakening quite a bit here already. All right, let's get to the first word news. We got Sue Keenan in New York. Sue.
All right, thank you very much, Yvonne. We're going to start with the latest on the economic front. It slowed again in the last quarter as the global slump continued to hurt exports. However, consumer spending before last month's sales tax hike and stronger corporate investment prevented an even sharper deceleration. GDP grew at an annualized 0.2% in the September period, and that's from the previous quarter. Economists had forecast an expansion of 0.9. To Australia now, the devastating bushfires raging across eastern Australia have claimed another life. The body of a man was found outside the rural New South Wales town of Kempsey. That's about 280 miles north of Sydney. The state has borne the brunt of the fires, with 3 other fatalities in the past week. Emergency services are warning neighboring Queensland will see worsening fire conditions over the weekend. Hong Kong, meanwhile, is set for continued disruption Thursday morning after yet another night of protest clashes with police. The government has ordered all public schools to shut down for the day, the first time it's done so since the unrest began. Now, on Wednesday evening, riot police moved in to clear the streets across the city, and local media reported that top officials were gathered at Chief Executive Carrie Lam's residence. To the U.S. now, the first public hearings in the formal impeachment inquiry into President Trump have heard from the acting ambassador to Ukraine and a senior official in the State Department's European and Eurasian Bureau. Now, the two were asked if they thought Rudy Giuliani, the president's private attorney's shadow diplomacy in Ukraine, was intended to dig up dirt for political ends, and both answered yes. They both denied being opponents of the president. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
Thank you, Sue. To our top story now, President Trump injected some optimism into trade negotiations, repeating that China is eager to strike a deal. He spoke after the Wall Street Journal said talks have hit a snag over farm purchases.
Trade agreement with China is moving along very rapidly. We'll see what happens, but it's moving along rapidly. China wants to make a deal, that I can tell you.
Yeah, that's the trade noise, Selena, but we have to talk a bit more about the data as well. Besides the progress on the trade deal or lack thereof, investors are also awaiting that slew of Chinese eco data that we talked about. In less than an hour's time, while figures on industrial production, fixed asset investment, and retail sales, all likely to show some weakness that continue to spread across the economy. This is, of course, at a time when the companies really had to try to adjust to that additional 15% U.S. tariffs on $110 billion of Chinese goods in September. So the likes of industrial production and fixed asset investment, retail sales, all showing signs of stabilization, if not weakness, across the board, Selena.
That's right, Yvonne. And joining us for more on that on set here in Beijing is Morgan Stanley Chief China Economist Robin Xing. You just heard Yvonne running through what we're expecting for that data dump. But what are you focused on, especially given the weak credit data?
Galera, eu vou nessa aí. Deu as 10 horas aí. E aí, quem for ficar aí, pessoal, prudência aí, tá? Pra mim o ouro vai voltar e o Dow vai cair. Pelo menos até amanhã, 7 horas da manhã aí, o ouro deve voltar a subir aí um pedaço, tá? Deve ir lá na região de 71, 77, por ali. Beleza? E o Dow vai dar uma corrigidazinha aí, mas ele tá com uma tendência muito forte de alta, tá, pessoal? E vocês podem verificar aí, quando ele fica fazendo novas máximas, ele corrige à noite, tem uma queda, é a hora que a gente vende, apura um dinheiro, e aí depois, quando abre o mercado americano às 10h30, no outro dia, o Dow começa a subir e faz novas máximas. Aí a gente vende à noite, faz o dinheiro, entendeu? Então ele tá dando para fazer isso aí, essa semana toda deu para fazer isso aí. Aí o ouro a gente faz ao contrário, né? A gente compra ele, porque quando ele cai, né, durante o dia, com a abertura do Dow Jones, lá do SP500, enfim, nas DAX, às 11h30, né, agora, aí o ouro vai e despenca. Aí quando é essa hora de noite, a gente compra o ouro, para ele subir até umas 7, 8 horas da manhã. Aí a gente sai da posição tanto no Dow como no ouro, e aí a gente espera a oportunidade de fazer essas operações. Beleza? É isso aí, galera. Uma boa noite a todos. Fiquem com Deus. Deus abençoe cada um de vocês. Tá? O ouro vai subir aí, só ter paciência. E o Dow vai cair. Ok? Valeu, pessoal. Um abraço aí para todo mundo. A gente se vê amanhã às 19h50. E quem for nos acompanhar aí amanhã às 8h40 da manhã, mini índice, mini dólar, na sala do além. E às 10 horas da manhã, canal do YouTube Trades do Além. Valeu, pessoal. Um abraço, tudo de bom para vocês. Muito obrigado pela atenção de todos. Valeu!